Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bearish scenario where we're looking for a three-wave corrective structure to the upside in a WXY double zigzag or an ABC zigzag structure. The target area is quite similar, we're already there. However, inside the target area for C, there is two main areas of interest that I keep an eye on: the daily naked point of control at 60.950 as well as the weekly naked point of control at 62.850. If we then zoom into the latest move towards the upside from this low here, we can count an impulsive structure. 1, 2, and then another 1, 2, 3, 4, 5, finishing the green wave 3, looking for a green wave 4 and at least one more move towards the upside in the green wave 5 to move towards the daily naked point of control, because preferably I would like to see those levels hit. And the green wave 4 here has the green target box, and the green target box is the price action of the lower degree white wave 4, because when we talk about degrees, we have in green 1, 2, 3, 4, 5, and inside the green wave 3 we have the white count 1, 2, 3, 4, 5. Based on the Elliott wave guidelines, a wave 4 of a higher degree tends to retrace to the price section of the wave 4 of a lower degree, which is what the green box represents, taken from the highest point to the lowest point of the white wave 4, and as you can see so far, nicely respected. The second scenario on the 1 hour time frame is a leading diagonal that is finished in a wave 1 or A, looking for a 3-wave corrective structure in a 2 or B, and then continuation to the upside in a wave C or a wave 3. Preferably after a diagonal structure, however, you see a sharp corrective move, for example a zigzag ABC, compared to a flat structure. That is less common. Now the common target area nonetheless for your wave 2 is the blue area here, the 0.5 to the 786, taken from the low to the high of 1, 56.5k to 54.7k. And the common target for your B is between the 382 and the 886 Fibonacci, taken from the low to the high of A, 57.2k to 54.1k. Preferably your wave B or wave 2 is ending at least after the 0.382 Fib time, taken from the start to the end of wave 1 or A, comparing this structure up to the retracement down. Because of the short amount of time it took for this move towards the downside, it is difficult to believe that after such a diagonal to the upside, this small structure is your finished wave B or 2, and therefore we have to consider the flat structure. A common target for your wave B in a flat is where we are now, the 1.236 to the 1.38 Fibonacci, taken from the start to the end of your wave A, giving you a target between 60.2k and 60.6k. If price moves up to 61.4k, the probabilities for this scenario will significantly be reduced. The most bullish scenario is a multi 1-2, 1-2, 1-2, 1-2, 1-2, and then we're looking now for a very big impulsive move towards the upside. Big candles, volume increasing, and the resistance should be absolutely peanuts. But this scenario does not have the highest probability. You can see that the structure to the upside so far is not as impulsive as we would like to see, with the volume dropping as price is moving to the upside, which is not what we like to see. Also, having a quadruple 1-4 is not that common as well. Now for the targets, if we are looking for this, we want to at least see the 1.618 in blue hit here at 63.9k, moving above the highs over here as well. But then again, at the moment, based on the local structure to the upside, not the highest probability, and also a quadruple 1-2 is not very common. Seeing a double 1-2 or maybe a triple 1 is something that you can see, but having 4 in a row is not very common. Looking at the CVD divergences in this structure, structure towards the upside, the bullish CVD divergences have played an important role with price moving up. The bullish CVDs have consistently played out, and it is always important to also keep an eye on some bearish CVD divergences, which did play out over here. But at the moment, it is quite calm on the chart. There are no big bullish CVD divergences. We only very locally on a 5-minute time frame here have a bit of bullish CVD divergences, but that is about it. And if we then finally look at the probabilities of the different scenarios, then on the 15-minute time frame, the probabilities at the moment are higher to still look for price to move towards the upside to hit some proper resistance, the daily naked point of control or the weekly naked point of control, and keeping an eye on support in the green box over here. On the 1-hour time frame, the probabilities at the moment are increasing for the bearish scenario, the 3-wave corrective structure, and then a move towards the downside, mainly because of this range that we have to the upside over here. On the number 2 position, we have the diagonal followed by the flat structure, and on the number 3 position, we have the multi 1-2. And the reason it has the lowest probabilities at the moment is because we really want to see significant volume to the upside. Volume increasing, big candles, and we don't want to see these ranges all the time, right? And at the moment we do not see significant volume, no big candles, and we are ranging all the time. It's also weekend, right? So what I'm going to be doing here is I'm going to be observing the price action when we hit resistance and look for some signs of weakness. I like to look for signs of weakness and observe the reaction, because there is always the danger of a very impulsive high volume candle to the upside because of the multi 1-2 scenario. But what I would like to see is price holding the level, ranging below, and then look for signs of weakness like a market structure change, bearish CVDs, losing the support levels, etc. Right? You may have different tools and different things you're looking at, but these are some of the things that I will keep an eye on. That being said, I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Wave Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.